Right now, 3 different federal agencies are updating rules that affect how much money retirees keep this year. The IRS has a new deduction that didn't exist a year ago. Social Security has new numbers tied to your monthly check, and Medicare's premiums just change the math on what actually lands in your bank account. Here's the part that surprises people. None of these agencies are going to call you, text you, or email you a personal heads up. You either know about these changes or you find out the hard way: a smaller refund, a smaller check, or a bigger premium than you expected. We're going to walk through all 3, in plain English, using only official numbers from the IRS, the Social Security Administration, and Medicare. And we'll tell you exactly where scammers try to insert themselves into this exact conversation, because they always do. Let's start with the IRS change for 2025 tax. Returns, the ones being filed this year, there's a brand new deduction for people 65 and older. It's separate from the extra standard deduction seniors have always gotten, and it's on top of it. Here's how it works. If you're 65 or older, you can claim an additional $6,000 deduction. If you're married, both 65 or older, and filing jointly, that's $12,000 combined. This isn't a credit, it doesn't hand you cash directly, but it reduces the income the IRS taxes you on, which for many retirees means a smaller tax bill or a bigger refund. You don't have to itemize to get it. You can take the standard deduction and still claim this one. It's tax on top of everything else. There is a catch, and it's the part that trips people up. It phases out based on income. If your modified adjusted gross income is above $75,000 as a single filer or $150,000 for a married couple filing jointly, the deduction starts shrinking. The IRS reduces it by 6% of the amount over that threshold. So someone $15,000 over the limit loses $900 off their deduction, not the whole thing, but not the full $6,000 either. Above roughly $175,000 for singles or $250,000 for joint filers, it disappears completely. There's also a rule that catches married couples off guard. If you're married, you have to file jointly to claim it. Married filing separately doesn't qualify, even if you've lived apart the whole year. On top of this new deduction, the regular extra standard deduction for seniors also went up slightly for the 2026 tax year. $2,050 for single filers and $1,650 per qualifying spouse for couples. Small increase, but it adds up alongside the bigger one. Here's a realistic example. Say you're 68, single, and your income puts you comfortably under $75,000. Between the regular standard deduction, your extra senior deduction, and this new $6,000 bonus deduction, you could be looking at over $24,000 in total deductions before you even start itemizing anything. For someone on a fixed income, that's real money staying in your pocket instead of going to the IRS. The mistake we're seeing most often: people assume their tax software or preparer automatically applies this. Most good software does, but if you're filing a paper return, you need to check the age box and make sure your Social Security number is listed correctly, because that's how the IRS verifies eligibility, and this deduction shows up on a specific new form, Schedule 1A, in the section for the enhanced senior deduction. So if you're wondering why your refund doesn't look right, that's often exactly where the missing piece is hiding. This is also exactly the kind of change scammers love. Anytime there's a new tax break, phone and text scams show up within weeks, pretending to be IRS agents who need your Social Security number or bank information to process your new deduction. The real IRS will never call, text, or email you to ask for that information. If you want to check your eligibility, the only place to do it is irs.gov. Now, this new deduction interacts directly with something else, Social Security, and that's where change number 2 comes in, the Social Security update. Every January, Social Security benefits adjust for inflation. This year, that adjustment, called the COLA, or cost of living adjustment, came in at 2.8%. For the average retired worker, that pushed the monthly benefit up by about $56, from roughly $2,015 to around $2,071. If you also receive supplemental security income, that increase started a few days earlier, at the very end of December. That part's automatic. You don't have to apply, call, or fill out anything. The increase shows up in your payment on its own, and SSA mails or posts a notice explaining your new amount. But there are 2 other numbers that change this year that matter if you're still working while collecting benefits. If you haven't reached full retirement age yet, you can now earn up to $24,480 a year before Social Security starts withholding money from your check, $1 held back for every $2 you earn above that. If you're reaching full retirement age this year, that limit jumps to $65,160 with a more forgiving withholding rate. Once you're at full retirement age, there's no limit at all. You can earn any amount and keep every dollar of your benefit. Here's the piece that surprises a lot of retirees. Your COLA increase and this tax deduction we just talked about don't operate in isolation. If your income is near that $75,000 or $150,000 threshold for the enhanced senior deduction, a bigger Social Security check combined with any part-time work can nudge you over the line and shrink that deduction. It's not a reason to panic, but it's worth knowing the numbers talk to each other. On the emotional side of this, and this is worth sitting with for a second, a lot of retirees we hear from say the COLA never quite feels like enough, and there's a reason for that. The COLA is based on an inflation measure built around younger working households, not retirees, so it often understates how fast healthcare and housing costs are actually rising for people over 65. That's not a conspiracy or a scam, it's just how the formula works, and it's one reason many seniors feel like their raise disappears before it arrives. Which brings us to the biggest reason that raise can feel smaller than expected. Medicare premiums are usually deducted directly from your Social Security check before it ever reaches your bank account, and Medicare just made its own changes. The Medicare update, the standard Medicare Part B premium, the part that covers doctor visits and outpatient care, increased this year from $185 to $202.9 a month. That's a jump of $17.9, and it's the first time that premium has crossed the $200 mark. For most people, that amount comes straight out of your Social Security payment automatically. So of that $56 average COLA increase we just talked about, close to a third of it can get absorbed by this premium increase alone before you ever see it. If your income is higher, generally above $109,000 for a single filer or $218,000 for a married couple, based on your tax return from 2 years prior, you may also owe an income-related monthly adjustment amount, or IRMA, which can add anywhere from about $81 to nearly $500 more per month. On top of the standard premium, this is based on past tax returns, so it can catch people off guard if their income was temporarily higher 2 years ago, say from a home sale or a large retirement account withdrawal, even if their income is lower now. There is a process to request a reduction if your income has dropped since then, due to a life-changing event like retirement. Now here's the change that deserves the most attention, because it's the one most likely to actually save you money if you qualify. Medicare's Extra Help program, which assists with prescription drug costs, has updated income and resource limits for this year. Generally, if your annual income is under roughly $23,000 to $24,000 as an individual, or around $32,000 as a married couple, and your savings and resources fall under about $17,000 single or $34,000 married, not counting your home or one vehicle, you may qualify for Extra Help. That can mean no Part D premium, no deductible, and prescription copays. Capped at around $5 for generics and about $13 for brand-name drugs. And there's a broader safety net this year too. No matter what program you're on, total out-of-pocket drug spending is capped at $2,100 a year. After that, covered medications are free for the rest of the year. Here's the surprise a lot of people don't realize. You don't have to be flat broke to qualify for Extra Help. Plenty of retirees who assume they make too much are actually within range, especially once Social Security's income exclusions are factored in. SSA estimates the average value of this benefit at close to $5,700 a year per person, money that goes straight back into your pocket if you take the time to apply. And the reverse is also true. Some people who qualified last year no longer do, because these limits shift annually, so it's worth rechecking even if you were denied before. This is also, unfortunately, prime territory for scams. Fake Medicare agents calling to verify your Extra Help enrollment or asking for your Medicare number to activate new benefits is one of the most common scripts scammers use every single year during enrollment periods. Medicare will never call you out of the blue asking for your Medicare number or banking details. If you want to check your eligibility for Extra Help, the only places to do that are medicare.gov or ssa.gov, or by calling Social Security directly. So here's the through line connecting all three of these changes. The IRS handed seniors a new deduction worth up to $6,000. Social Security raised checks by 2.8%, and Medicare raised premiums enough to eat into a chunk of that raise while also expanding help for people who qualify for extra help. None of these agencies are going to proactively call you to walk you through what applies to your specific situation. That's not how any of them operate, and it's exactly the gap that scammers try to fill every single year with fake calls, texts, and emails claiming to be urgent updates from the IRS, SSA, or Medicare. The rule that protects you is simple. These agencies communicate through mail, through your online account, or when you call them, never by cold calling you and asking for personal information or payment. If any of this applies to you or to a parent, grandparent, or friend who relies on these programs, it's worth spending 15 minutes checking the official numbers at irs.gov, ssa.gov, and medicare.gov. And if you know someone who could use this information, send them this video. It might be worth more to them than the raise itself.